Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 15th of January. Starting off with the FTSE 100, which has managed to withstand the potential disruption from protesters with the arrest made. And here you can see we've got a rising trend channel that's been in place since the end of October. Rising 50 and 200-day lines as well. And above the 200-day line, we're looking for a break of 76.80 to take us up towards 78.20 by the end of next month. I'm not looking any quicker than that, given the rather slow price action. On the downside, a break of the 200-day line, 75.70, could take us down to 75.40. And the floor of that channel, as well as the 50-day moving average, but we're not expecting worse than that at this stage. RSI has actually had a fader at the 50 level, so that does bode rather negatively in terms of being a potential leading indicator on the downside, but at the moment we're hoping that 75.40 is the worst that we'll see. Onto the DAX, and here the picture that of consolidation still. We're between the old July resistance and December resistance, so that's 16,500 to 17,000, waiting for an end of day close outside those two parameters. On the downside, that would be down to the 50-day line, 16,200, and on the upside above 17,000, we could see as high as 18,000 by the end of next month if we break 17,000 relatively quickly. Double RSI bounce off the neutral 50 level, so that at the moment makes this market look relatively stable and strong. The next market is the Dow, and here with the holiday, we've got rising trend channel. Seen the market actually on the floor of that channel from October around 37,500. Above that, we're looking for 39,300 by the end of next month. The trigger for such a move to the upside would be an end of day close above the March resistance line from last year at 38,000. So the levels here, 37,500, 38,000 and 39,300. If we break down, the worst we'll expect at the moment is 36,300, which is the old December resistance and very close to the 50-day moving average. The market at the moment, I suppose, is still Bitcoin, and here we can see that this market has had a slight rug pull from the best levels after the ETF news came out, sort of better to travel than arrive, etc., etc. We are just below the, or just around the 50-day moving average, 42,300. We were allowing down to 40,000 as a potential retracement point. Worst case would be down to 38,000, which was the old November resistance. And at the moment, we're still trying to work out exactly how wide that trend channel is from back in October. At the moment, the next trigger on the way out would be an end-of-day close through 45,000, as was the case earlier this month. Big picture target up towards 52,000 by the end of next month, which is the top of that rising trend channel from back in October. But obviously these things are always a little bit wobbly in terms of exactly where they stand. Moving on to gold, and here we've had a reasonable rebound on a rising 50-day moving average, 2022. Above that, looking for the big break of 2060 to take us up to 2100. 2060, I suppose, was one of the original trading points, especially back in December, but 2060 and then 2100, the levels on the upside, and then 2020 and an end-of-day close below that would take us down to 1980 and the rising 200-day moving average. But with the RSI now back above neutral 50, we're looking for the upside rather than the downside. Moving on to the stocks, and starting off with African Pioneer, one of my stocks for 2024. Here we've had a nice rebound above a rising 50-day moving average. In fact, both the 50 and 200-day lines rising now. That means we're looking for 3.4 pence as soon as the end of next month. Probably if we're waiting for a trigger, it would be an end-of-day close for 2.6 pence, recent January resistance. In terms of falling knives and dead cat bounces, doesn't get much better than Canadian overseas. Here, looks like we may have a broadening triangle base. A bit of a rebound in the RSI window off the ultra oversold levels. If there is a level to look at in terms of neckline resistance, probably 0.11 above that on an end of day close basis, we could see the shares heading back into the low 30s, but obviously anything could happen here, and it could be anything from shares being suspended, company going bust, etc., etc., to a wonderful revival. So you take your on to Digitalbox, and here we have one of our the setups we like, which is an unfilled gap to the upside, and then a break of the top of the gap up day. That suggests that above 3 3/4 pence we could see Digitalbox heading as high as 5.5 pence by the end of next month, or even sooner. Neckline resistance there at 4.2 pence, so above that looking for 5.5 pence relatively comfortably. The gift that keeps on giving at the moment is Corcel, and here above a penny we were looking for as high as 1.3 pence, the way we are at the moment, not looking too far away from that. V-shaped bull flag, it was minimum consolidation, so 1.3, 1.35 on the cards by the end of this month. Mentioned, or there was a mention for Fulcrum metals in the RNS hit list today via Panther Metals, and it looks as though after a long time, after many months, in fact, since the shares came to market, we're going to try and break that 200-day moving average at 16 pence. Above that, looking for 18 or 19 pence by the end of next month, or even sooner. Ideally, that would be by the end of this month. But that rising trend channel base looking relatively encouraging at Fulcrum. Next stock is Geiger counter, and here you can see the rising trend channel, which has been in place since May. We've broken through recent resistance around the 58 level, and above that looking for 70 pence by the end of this month, or even sooner. Moving along to global petroleum, and here I've given the shares quite a lot of coverage in recent days, and they have responded rather well. Here we've got rising 50-day line, V-shaped bull flag breakout through 0.09, and above that looking for 0.16 by the end of next month. Stock which is also trying to rehabilitate itself at the moment is i3 Energy, and here we've finally broken that trend line there from the beginning of October, around 10.9 pence. Above that looking for the 200-day line at 14 pence initially, hopefully by the end of this month, and then by the end of next month as high as 17 or 18 pence at the top of that broadening triangle base from the end of June. It was interesting to see the walk-in pain clinic from Kanabo in the RNS today. Here we've got a V-shaped bull flag, and a break of 3 pence could take us up to 4 pence as soon as the end of next month. Ideally, we stay above recent support around the 2 pence level. Got high hopes for the following stock, which is Tech, and here you can see V-shaped bull flag above a rising 50-day line. That suggests that a break of 14 pence could take us up to 20 pence by the end of next month. Stock which had decent coverage here of late has been Oriole, and here you can see the unfilled gaps to the upside. We've got a bull flag in place now as well. Hit our old target there around 0.23, above 0.23 we're looking for a reasonable target here, up to as high as 0.32 by the end of next month, or even sooner. I covered Predator last week, and it looks like it's listening at the moment. Here we've broken the rising 200-day line at 10.3 pence. Above that looking for up to 15 pence by the end of next month. If you're cautious, you wait for that 12 pence resistance line to be broken. But ideally we stay on the right side of that 50-day line in the meantime. Going on to Thor Energy, and here unfilled gap to the upside off a rising 50-day moving average. That suggests that we can hit 3 pence as soon as the end of next month. Also, we would break the 200-day line for the first time properly since the late summer of 2022, but above 1.5 pence, looking for 3 pence at Thor Energy. Finishing off with the URA, where it looks as though the excitement ahead of potential production it has started to gather, and here we've got a V-shaped bull flag either side of the 50-day line at 1.4 pence. Above that, we're looking for 1.8 by the end of this month, and hopefully up to 2.3 or 2.4 pence at the top of that falling trend channel from March last year by the end of February. That's it for me today. More updates tomorrow.